Good day, students. So in this video, we are going to continue talking about taxes, and today we're going to talk about income taxes. So for these notes, your teacher should have given you some sort of income tax table. This is the one that I'm currently using for this video, so you should get something that's either exactly like this or something that is similar to this. If your teacher did not give you this, I would take a moment to pause and copy this down. You can copy it down, I would say, at the bottom of your notes. So maybe take the last 8 to 10 lines of your notes and kind of create this income tax table. If you did get a printout, you can simply tape or glue it to the bottom of your notes here. You can either do that at the start or at the end, but go ahead and take a moment to pause and either copy that down. And then after you do that, we're basically splitting our page in half. So you can split your page in half so it's ready to go for your notes. Okay, so let's get into income tax and what that is all about. So income tax is tax on your income earned. And remember when we talked about our financial vocabulary, income is money that you earn from a job or some sort of trade. Depending on what your income is, a lot of times you do have to pay taxes to the government, and a lot of times your job or the company that you work for, they take out your income tax, like basically from your check every month or every week, however frequently you get your check. Some states don't have an income tax, just like how some states don't have a sales tax. So Texas does not actually have an income tax. A lot of times what happens is if states don't have a sales tax, like the state of Pennsylvania, let's say, the state of Pennsylvania doesn't have a sales tax. So when you go to the store and when you purchase something, like the price is what it is, there's no additional tax. But the state of Pennsylvania does have an income tax, meaning that when you get your paycheck every month, it's not going to be the full amount that you typically earn based on your job because there's money taken out for taxes. So it really just, again, depends on the state that you live in. So let's say that we are working in a state that has income tax and our yearly income is $65,000 and $500. $65,000 and 500. I'm so sorry. My brain is not working right now when I'm speaking out my place values. And let's say we have a tax rate of 6.25%. Okay. If we want to figure out how much of our income is being taxed or what we are going to have to pay in taxes from our income, we're simply going to take a percentage of a number. So we're going to have 6.25% of our income. So again, when we take a percentage of a number, we can multiply the percent times the value and then divide it by 100. We could also put this as a decimal, this percentage as a decimal, and then multiply it by our income amount. Either way, in this case, our income tax that we are going to have to pay, or 6.25% of our income, is going to be $4,100. I'm pretty sure it calculates that exactly. If it doesn't calculate exactly, make sure you round it to the nearest hundredth because, again, we're talking about money. So that's how much we have to pay in income taxes. So if we want to know what is our income after taxes, so income after taxes, we have to subtract these two amounts. So our income minus the amount in taxes. So that amount is going to be $60,100 or $1,500. So this is what our income is after taxes once we take out the tax amount. So sometimes your income tax is taken based on a percentage like this. Other times there might be something that's called a tax table. So the tax table will either figure out what your income tax rate is by looking at how much money you make, and then depending on how much money you make, you pay a percentage. So a lot of times you may have heard that, the more money you make, the more you have to pay in taxes. A lot of times what happens is people who make a lot more money, they do have to pay a lot more in taxes because the percentage on income is much higher. But sometimes a dollar amount is set. So instead of a percentage of your income, basically depending on your kind of life status and how much money you make, there's just like a certain dollar amount that you have to pay. So let's say we're going to use the tax table that I showed you earlier at the video. And so let's say that we are a person who is married. We are filing jointly, meaning that the couple who is married is filing their taxes together. If you're married, you can file your taxes individually. That's totally fine. Sometimes people do that because they get a better tax percentage. Sometimes people who are married, they file jointly because it's a better tax. There's less taxes you have to pay that way. It just kind of depends on your state and your income and things like that. And taxes can be very complicated. So that's why people hire like accountants, or they use programs like TurboTax, because there's just like a lot of moving pieces when it comes to paying your taxes. So anyways, let's say we're married, we're filing jointly, and our income is $69,000, 225. So if we look at our tax table, we need to find where our income falls in this table. So our income is going to fall in between, let's see, we have $225. So that's going to fall in between these two values right here, right? That's like halfway in between those two values. So we're going to look along this line here. So if we look at where it says married and filing jointly, and along that line, it looks like this couple is going to have to pay $9,514 in income tax based on their income. So this amount is $9,514. That's how much they have to pay in income tax. So their income after taxes is going to be their income minus this amount here. So I don't have quite enough space to write that down, but the income after taxes would be if you subtract those two values. So this is how we calculate income tax. We either are given a tax table and have to look at the tax amount, or sometimes the tax table might tell you the percentage. So instead of this saying the exact dollar amount, maybe this says like 6% or something. And so in order to figure out the income after taxes, we would have to go take 6% of that. But like, let's say you are single and you make that much money, like you're not married. Maybe this says like 10%. So you would have to go take 10%. So depending on your life status, also kind of is contingent upon how much tax you have to pay on your income too, which is kind of interesting. So for your practice today, again, you can tape, staple, glue this to the bottom of your notes if you didn't copy it down because you don't have a physical copy of it. For your practice questions today, we're going to keep it pretty simple. So there's two main practice questions. So the first one is, I just want you, based on this income and this tax rate, to tell me what is the income tax. So what is this percentage of this number? And then what is the total after taxes? Once you take away that amount in income tax, what is this person's take-home pay or their new income? And then the second one is, I want you to write a question based on the income tax table. So I want you to take the income tax table and I want you to write a question. So the question I wrote is, I picked an income amount that falls somewhere in this category, in one of these categories, and then I classified the person as married and filing jointly. So do the same thing, pick an income amount and classify the person as something. So that way someone has to figure out the income and look along the line to the particular life status in order to figure out the amount of taxes. So you're writing a question based on the notes in your tax table. And if your tax table is different than the one in this video, obviously use that tax table that your teacher gave you. So you can kind of get your answers checked by your teacher. If you have any other additional questions, please make sure to reach out to them. As always, have a great day. See you soon. Bye.